Hi everyone, this is Nick from Coin and Paper, and today we're going to look at investment research. So there's various types of investments out there, such as stocks, mutual funds, bonds, etc. But as far as the method for an investor to go about researching, there's two main philosophies, or two main ways investors think about doing the research. And we're going to look at those two ideas today. So we're going to type up here methods, and basically the first one is fundamental analysis, and the second one is technical analysis. And so we're going to dive into each one. So let's actually type this first. The technical analysis and then the fundamental analysis. All right. So as far as the fundamental analysis, the focus of this is intrinsic value of a company. Now, let me back up for just a second. So as far as, because there's different types of investments out there, like stocks and bonds and mutual funds. So a mutual fund is a group of stocks. A bond is related to a specific company, and a stock is related to a specific company. So as far as fundamental analysis, we're going to look at this at a company level, so just looking at one company. But if we also invest in mutual funds, because it's looking at a group of companies, if you can do fundamental analysis on that too. You just have to dive deeper in the portfolio or the fund and actually look at the companies within it. So I would say this research, we look at the company level, and so this is suitable for all types of investment types. All right, so that's the focus of fundamental analysis, or at least one of the focuses. We're going to add more in a minute. But for technical analysis, the focus is price movements. So this is looking more, technical analysis, looking more at the price of a stock and seeing how that stock's price moves over time, and to try to identify any trends with the movement. So you may see some type of trend that the stock moves up at the beginning of every month, or quarterly, every quarter it's been going up a certain percentage. So it's identifying trends in the stock movement as far as the price, to see if you can catch any opportunities to make money off of that. So basically price movements and market movements. So market movements I added here because the market overall can affect the price. So if you see any market movements, like overall stocks are moving in a general direction, because any things out there, any news on the environment, you'll notice the trends, and then you start investing to those trends. So I'm going to just write trends. Now to add some more to fundamental analysis, we talked about the intrinsic value. So the intrinsic value is really derived by like what's going on in the company. So the management can affect that. So I'm going to just write company information. And so management could be a factor, products, financial information. So really the core of the business, what makes up this company, the strength of the company. So you're really looking deep within the companies to see, is this valuable? Do I think this is a solid company? Or not only do I think it's a solid company, but does the information show that it's a solid company? Where this technical analysis is not really interested in that. It's more interested in how the stock's going to move. So whether the stock is weak, or actually the company, if the company is weak, but it's moving a lot, and as far as price, technical analysis just focuses on the price movement. So even if it's a weak company, you may still go ahead and invest it or buy the stock because you think the price is going to move higher, and so you'll be able to offload it or sell it at a higher price than what you bought it for. So that's all you care about. You care about the making quick money. So with that said, if I add the horizon of the focus here, fundamental analysis is more of a long-term thinking. So people call this sometimes investing versus trading. So trading is, you can think of it as more short-term. But trading is actually just a transaction, but people sometimes describe short-term or quick trading. They're trying to make quick money short-term. And a long-term is more of a longer-term investing strategy. But you can actually use both together for either purpose. So for me, I prefer to look at both when investing, but I lean a little bit more towards the technical analysis side. But it's important for you to look at both, understand both, and find which you're more comfortable with and prefer. So as far as how you do the research, so for fundamental analysis, you look at financial statements. So each quarter, especially publicly traded companies, they are required to report their financial statements. So that is, they have an income statement, a balance sheet, a statement of cash flows. So information showing the results of how they did in the last 90 days, so the last quarter. And that information is supposed to help investors decide, is this a strong company? How did it do? How much money is it making? How much product is it selling? And how is the management managing or their finances? Are they taking on a lot of debt? Are they issuing shares to raise money? How are they raising money to fund their operations and things like that? So all those things are important for fundamental analysis, and then from that information, investors can take that data and look at metrics. So they do financial ratios to determine how they're doing compared to its peers. And so that's financial statement, but also you can look at the company and market information. So not only just deep in the numbers, but how is the products doing and how are its competitors doing. That can affect the fundamentals of this company. So company and market information. Now for price movements or technical analysis, what's important is charts and graphs. So essentially, how many shares of the stock is moving, what the prices are over time. So you just want to look at graphs, plot out the graph of how many over a certain period of time and see how the price has moved over that period of time for this particular stock. And then you're going to start noticing trends there and start predicting. So both of these, you're actually predicting where the stock is going to go and what the value is of the particular stock. Now, where would you get this information? So you can get this information as far as fundamental analysis, and actually both. You can get it online. So you can look at online finance websites. And so both of these can be found easily on like Yahoo Finance, Google Finance. So if you look up a company, they have a lot of information regarding these, and you can even access the financial statements there. So the other place is company website. So the company website usually has their financial statements there as well, so you can dig in. The technical analysis, probably less often go to the company website to get financial statements because, again, they're focusing more on the charts, and those charts, as far as the price movements over time, can be found right on the online finance websites. So these are the two main methods of researching stocks. And if you look at technical stocks real quick, or technical analysis, here I have Google Finance. It's also Yahoo Finance. And basically, if you want to look up a specific stock, say like Apple, you can type it in. So Apple Incorporated. And so here we see the stock price. And we could use Yahoo Finance as well. I actually like Yahoo Finance a little bit better, but either one works, so you can pick which one works better for you. And so I typed in Apple, and here's the same more or less the same information, just looks a little different. But I'm going to stick with Yahoo Finance right now. But when we scroll down, on the right, you can see the graph. So first of all, you can see the price. The current price is $117. The previous close, the day before that the market was open, the stock closed at $116. So you can see that the price went up today by 74 cents. Now, if we look at the graph here, this shows the stock price over time. And right now, it's on 1 year. So you see the horizon of 1 year. So 1 year ago, the price was actually, and yeah, there it goes. So 108.74. So in that time, you can see how we're volatile, and basically how much the stock has moved up and down. So it went from 108 about, down to 94, up to 107, or 108 at 112, down to 90, and up to 118, and here back to 116. So it's quite volatile. So from this, you could start to get information to see what the trends are. So the trends is up and down, very, very up and down. So depending on your perspective, but it looks to be up and down. So maybe at this price you think, well, maybe I won't buy right now because it's going to go down again. And so you'll wait. But at the same time, look, the highest has been is 132. So this is judgment. You use your own judgment, your own research, and more information to find out where is it going to move. It's all prediction. It's all prediction. No one really knows where it's going to move. Otherwise, everyone would be billionaires. And it's not a crystal ball here. It's what you think it's gonna, what it's gonna do. So you would do more research to make you more comfortable as far as predicting where the stock's gonna go. But this is more or less technical analysis. But the fundamental analysis is more focused on fundamentals, which is the underlying business. You really can't get too much of that information by looking at the chart, but there are some statistics that are derived from the financials, such as PE ratio. So that's price to earnings ratio. So essentially, how many dollars are you paying for this stock for every earning dollar that the company makes? So there's some statistics for you. As far as the financials for fundamental analysis, if we click on there, this is show you the different financial statements regarding the company. And so you can use this information to put together metrics and statistics or ratios to figure out fundamentally, do you think this company is very valuable or undervalued or overvalued? Because if it's undervalued, you're saying that the financial statements are strong, but it doesn't reflect that in the stock price. So do you think it's undervalued? So you think it's a good deal. It's a good deal to buy this because you're buying it for cheaper than it's currently valued at. Where if it's overvalued, you think that the stock price is higher than what the company is actually worth by looking at the financial statements. So here you can see an income statement. So you can see this company, Apple, made $215 billion, and looks like that year. Okay, so this is by year. You could also see it by quarterly by clicking on quarterly. And then the other financial statements are cash flow. So this is showing how the money is being spent and coming in, and how they're funding their business. And then the balance sheet, you can see here as far as what they own at a particular point in time. So financials helps with the fundamentals, and these charts more help the technical, but both are pretty important in my opinion. So it's important to understand both types of research methods and figure out which one you're more comfortable with, but at the same time try to be comfortable with both so you can use both to make wise decisions. So no one knows exactly where stock's going, so it's important to research and try to get as much information to help you make a decision as far as what is a good investment. And then in another video, we'll talk about looking at a specific stock or a specific mutual fund and look at more information you might look at to decide which ones you want to buy. Thank you.